Hey everyone, welcome back to Upside Down Data. So if you didn't hear, we are soon going to be releasing our Polarity Digital Pro subscription service here on the website, polaritydigital.io. Link to the website in the description, and I'll leave a link to the announcement video in the description as well for more details. But essentially, the subscription service is going to allow us to provide new content, new models to subscribers that will add additional value to this proposition. So in addition to all the content that's already available on the site, we'll be adding some new models and some support for some different assets. And one of the models that we're going to be adding support for when we launch the subscription service is the macro trend model. So what I'm going to do is get my head out of the way here and go ahead and talk about what this model is, how one can think about it, interpret it, and then talk about some back testing to see how effective it would be, using different strategies going through time. So with this model, if you're familiar with our market direction classifier, you'll be very familiar with the idea of the macro trend model. Essentially, it creates this orange critical line that goes throughout time. And if the price of Bitcoin is above that level, that's bullish. That means you're in a bull market. Below that orange line, that's bearish, means you're in a bear market. And so you see how it's done this fantastic job throughout Bitcoin's past of identifying these tops going into bear markets, and then these transitions into new bull markets. Nails every single one. And this is information that I think is extremely useful to a crypto investor because crypto tends to go in cycles. We talk about market cycles all the time on this channel and elsewhere. You see that term come up over and over again. And the idea is that markets move in cyclical ways, that there are these kind of secular bull markets where, generally speaking, price is just pulled up until you get to these big blow-off extreme tops. And then you transition into a down cycle, a downward part of the market cycle where you go into a bear market and things move down. And in a bull market, generally speaking, all boats will be lifted. You can kind of throw a dart at the dartboard. If you hit the right thing, you can make quite a bit of profits. But if you start trying that in the bear market, trying to invest in a bunch of altcoins or even just investing in Bitcoin, it doesn't go so well. You can have some pretty nasty drawdowns. Bitcoin has certainly seen its share of nasty drawdowns as well. But if you can know, am I in a bull market? Am I in a bear market? That tells you which way to be thinking about the market. Do you be offensive, try to really maybe take on more risk to capitalize on the upside, or should you be cautious and wait for a better time as in a bear market? And that's kind of the golden ticket. If you can get that information, then it really helps to navigate the market more effectively. And so obviously that's something everyone wants to know. And this model, and we have another model that I'll talk about in a separate video, the macro cycle model, get at this idea very well. And you can see how well this model's performed, really nailing the tops and nailing the bottoms of every single market cycle. With the exception here, technically we put in a higher high over here relative to back here, but really the way that I look at it, I think a lot of people have been looking at it, is that this was the beginning of the bear market, that this was really the blow off top, and this is more or less a dead cat bounce going to a double top before the big bear market began. And so this model basically identified that. It did not think that we were going into a new leg up in the bull market. It correctly identified that this was a basically dead cat bounce, and then the big bear market followed. So let's now talk about some backtesting strategies that one could potentially employ using a model like this. And these are going to be very simple. We're going to keep it very simple here. So some strategies. So the first one that I'm going to talk about here is what the macro trend model strategy is going to be that I'm going to be using in this backtest. And as I said, it's extremely simple. Basically, the idea is that if price flips above the critical level of the macro trend model, MTM, then that's a buy signal, then you buy. And then if a sell signal would be when the price flips below the MTM critical level. And so for the simplicity here, we're just going to be buying everything, throwing all of our money in, and then selling, we're going to sell everything that we have. So it's just going to be all or nothing. We're not going to be, dynamically changing the amounts that we're putting in or taking out. But that's the idea. Very simple. And then the buy and hold strategy is going to be the comparison strategy. And I like to use buy and hold as a comparison because ideally any strategy you use should beat the market. If you're not beating the market, if your strategy has no advantage over just buying and holding the asset, then what's the point? You might as well just buy and hold Bitcoin. The only kind of useful strategies that are out there are ones that can outperform simply in buying and holding and just riding it out through time. And so this is exactly as it sounds, where this strategy is just going to buy at the beginning with everything it has and just never sell. Basically just hold the entire time. Okay, let's talk a bit more about the setup going into this. So I arbitrarily just chose October 1st of 2017 as the start date. And then we're going to be ending December of 2022. And again, that's arbitrary, no particular rhyme or reason, just that is what I chose to do. And then both strategies, both the MTM and the buy and hold, they're going to be starting with $1,000 worth of Bitcoin. So a fair start. Basically, both are starting with the exact same position. Then the idea is, can the MTM get ahead of buying and holding by strategically selling and then rebuying based on those signals that it's generating? And then I should also say that this backtest will account for transaction fees for the MTM strategy. So those will be taken into account. That's important to do because otherwise things get artificially inflated if you're not taking into account fees that would be incurred if you actually were to engage in the strategy. Okay, let's go ahead and look at what the results are. So here on the green line, we have the MTM strategy. The blue line here is the buy and hold strategy. And then that y-axis here is just the total value of that strategy. So how much value it has. So either value in Bitcoin or value in cash. And then the buy and hold strategy is just basically the value of that Bitcoin across time. It bought $1,000 worth of Bitcoin at the very beginning. What is that worth at the end is essentially what this is getting at. What you can see is that the MTM strategy absolutely destroys the buy and hold strategy. You can see the MTM model is getting up just under $35,000 from the start of 1,000, whereas buy and hold is down less than $5,000 here. And so I'm going to show some specific results, but just want to show this graph first to say that MTM is absolutely wrecking buy and holding. It's destroying it, blowing it out of the water. So we just look at the actual numbers then. You can see that the end value of the MTM strategy was 34.5 roughly K, and then that would translate into a 34.6 times 6x return on your money of that initial $1,000 you put in October of 2017. You would have almost 35x your money, as of December of 2022. Whereas buy and hold, you would have only 3.9x your money. A pretty dismal return, not that impressive, not that great. Okay, now one of the things that we can also look at here is not just the kind of returns in terms of relative to the initial investment, but also how much was the MTM strategy outperforming buy and hold? By what multiple was it outperforming? And here you can see it was just under 9x better. So basically, by using this MTM strategy, you would have made just under 9x more money than if you just bought and held. So that's pretty extreme, right? The market already did pretty well. You're now improving on that by a factor of almost 9. That's quite impressive in my opinion. But looking at this, you could say, okay, well, that's well and good, but what if you just happen to have chosen a particularly favorable start and end date for this strategy? Is this the case that you always would have been outperforming buy and hold, or might there have been some factor where if you'd chosen a different end date, for example, things would have looked different? And so that's what I want to talk about next, because with backtesting, there's always something you have to worry about, that even if you're just randomly or arbitrarily choosing your start and your end dates, it's possible that you just happen to have chosen one that would make your strategy look really good. If you chose different ones, suddenly your strategy might not look so good. So let's talk about that. So what we're going to do in this next backtest I'm going to show you is we're just going to shift the end date back a bit, and we're just going to make it exactly 4 years after the start date. So same start date, but now the end date is in October of 2021. So same setup, same exact thing. And what you'll notice is that things look a little bit different. So the MTM strategy is exactly the same. So this didn't really change because, it sold out here, and because it never rebought, through the end of the last one, it's just basically the same thing through here. But note that with the buy and hold strategy, because we're ending in October of 2021, the market was still considerably higher than it was, in December of 2022. The market was still considerably higher. Bitcoin was up at around 50K at that point. And so if we just look then at the end values, again, the MTM is exactly the same. It didn't change because, as of, earlier in 2021, it just bought and just held throughout the whole time. We're still talking about a 34.6x on your money, but buy and hold was at about 11x your money. And so the outperformance here was now down to 3.15x. And again, the reason for that is just that we chose a different end state. We chose an end state when the buy and hold was just happened to be higher because the market happened to have been up a bit. because we cut off, that earlier part. If we look here, we basically cut off this entire thing going down here. Whereas again, with the MTM strategy, it just sold and it just stayed selling throughout December of 2022. So that's kind of why this is looking different. And that's where these choices matter. It's important how you choose them. And so what I want to show next then is let's just say, okay, let's not trust ourselves to just arbitrarily be choosing start and end dates. Let's just try basically a whole ton of them, a whole bunch of them, and see on average, how does the MTM strategy stack up against buy and hold? Basically get rid of as much as we can the possibility of just happening to choose a favorable start and end date. Let's just test a whole bunch and see how things look on average, in aggregate. The truth tends to come out through aggregation by looking at averages or medians across a lot of data. So what we're going to do for this next exercise here, this next back test, is going to start at January 1st of 2021. So start way back, almost at the very beginning of Bitcoin's price history. Not exactly the beginning, but close. And what we're going to do is we're going to run a back test over the next 4 years. So basically ending in 2015, January 1st. And then what we're going to do is we're going to move the start date forward by 1 day and run it again. So from that date, run that back test then through the next 4 years. So basically starting at January 2nd of 2011 through January 2nd of 2015. And we're just going to keep on doing that, keep on doing that until we don't have any more data to look at, until we get up basically to the end of the data set. And so what that's going to do is it's going to show us 4-year returns. So basically we're going to do it for every 4-year window that we can. It'll give us a distribution of returns of performance over thousands and thousands of backtests, with every single possible 4-year window being tested between the beginning of 2011 and then till the last 4-year window that's possible. And then we're just basically going to record those performances across all that time. So it's going to give us a distribution, a whole bunch of backtests, and we can look at what is the average, what is the median performance, so on and so forth. And this will, again, eliminate that potential of just happening to have chosen favorable backtests to be showing. This will kind of eliminate that and just show, on average, what are the returns of this versus buying and holding, or just kind of on its own. Okay, so let's start off by talking about raw returns. So this is just simply the amount of profit that the strategy would have made across all of those 4-year windows from that very beginning. And on the x-axis, this is a logarithmic scale. I put this in a logarithmic form. And so basically you're going from, bins of 1,000 to a little bit above, in terms of profit, all the way up through to, well over $1 million in profit. This is 1, 2, 3, 4, 5, 6. This is 10 million up over in this area, with bins going up above that as well. And so what you can see is that when you apply this logarithmic x-axis, it looks like a relatively normal distribution. Of course, it's normal in the sense that you've already transformed the x-axis, but really with a lot of them kind of going around this $100,000 mark. So basically turning $1,000 into around $100,000. So 100x is where you're seeing a lot of things cluster up in that space. Now, of course, we can just look at the numbers then. Let's just go ahead and look at the mean median of this distribution. So the mean is about $423,000 is the average return. Basically turning $1,000 to do on average $423,000. But the median, which again cuts out any outliers, because as you'd expect, if you invested $1,000 in Bitcoin right at the beginning, right at 2011, the multiples of that is going to be a lot higher than if you did it more recently. So median helps us cut that out to some degree, smooth it over, and just say kind of what's the middle return that you might expect, and still quite favorable, still quite nice, 77x on your money. And what's really important here, and why one of the main reasons I wanted to show you this, is that in 100% of cases, in every single backtest, every single 4-year window that was looked at in this kind of amalgamation of backtests in that whole distribution, every single one of them was profitable. There was never a situation where you started out with that $1,000 and then you ended with less than $1,000. In 100% of occurrences, you made money. You were up over that $1,000 that you started on. And I think that's really critical, because there are going to be strategies where you can lose money very easily if you start out at the wrong time. This one, it did not happen. This one, every single time, it was profitable. So that's important to note. And then, of course, quite nice absolute profits, if we're looking at the median level. But now let's look at the returns versus buy and hold. So that was just looking at absolute raw returns, so just how much money on average would have been made from the 1,000. Now let's look at how it would perform against buy and hold. What is the average outperformance of the macro trend model strategy over just buying and holding? So basically, how much is it beating the market on average? So here we're just looking at a histogram of just showing how often, how many simulations it was above beating buy and hold, and then by how much. So these are multiples. So basically, 1 would be parity, 2 would be 2x, 3x, 4x, 5x, etc. And you see that the kind of massive area here where most of them fell was between 3 and 4x. That's where most of those 4-year windows fell. That the macro trend model was outperforming the market by between 3 to 4 times, with sometimes being over here really far out, 17, 18, 19, 20x what buy and hold was doing. So quite impressive. And again, beating buy and hold is really hard. So the fact that it's destroying buy and hold the vast majority of the time, and 3x, but then also with these kind of extreme levels up here, is quite impressive in my opinion. So if we just look at aggregation here, the mean is about 4x better than buying and holding. Median is 3.75. We have a decent standard deviation, so that's just a measure of variability. But then importantly, we see that it outperforms buy and hold about 95.5% of the time. So the vast majority of the time, it will be outperforming just buying and holding, and oftentimes by quite a bit, by 3 to 4x. And we can see that here, the median outperformance 3.75, mean about 4 times, with some of the more extreme levels being way up and above. And that seems to be kind of the general thing, where most of the time it sits in this general area of outperforming the market by, anywhere between, let's say 2 up to about 5, 6 times. But then occasionally, and this is probably around those cycle tops, if people are buying in at the cycle tops, the model won't be buying there. It'll wait for a better time. And that's when it can really outperform the market. Okay, and so the other thing that I just wanted to mention again is that, it's beating buy and hold 95.5% of the time. And then even in the times where it's underperforming buying and holding, it's still profitable. So even if it's not performing as well as the market, it's still going to be profitable in those 4.5% of the time. So generally then, the overall outlook that we can have on the model is that it performs very well. 100% of the time it's profitable, so you're not losing money 100% of the time in these back tests. And then also 95.5% of the time you're outperforming the market, outperforming buy and hold, and on average by a lot. By 3.75 times is the median outperformance, 4 times is the average outperformance. Quite impressive. So that is the macro trend model, and it's something that we'll have on the site. So it's currently not up on the site that you can access. We actually have a private instance of the site that we're using to test things, to kind of develop as we lead into the launch of the Pro subscription. That's where this is right now. That's what I'm looking at currently. But the idea is that once we launch our Pro subscription service, anyone who subscribes will get full access to the macro trend model, in addition to other models. I talked about the macro cycle model. It's another model I'll talk about in a different video. Similar in what it's looking at to the macro trend model, but a little bit different. We also have our forecast model. If you've been following the channel, you're probably familiar with that as well. That's going to be available on day 1, as well as support for a bunch of new assets and exclusive content and more. So again, link in the description for the announcement video where I go over the features of the Pro subscription in much more detail. But in this video, I just want to do a deep dive on the macro trend model, because I think this is a really exciting model. This gives us really great insight into where are we in the market cycle. Are we in a bull market? Are we in a bear market? And then again, Pro subscribers will be able to access the full set of this data and be able to see today, what is it making of Bitcoin's price action? Does it think that right now we are in a bear market still, like it did as of December of 2022? Or does it think we might be in a new bull market? That's something that Pro subscribers will be able to see day 1. So we're very soon going to be announcing the official launch date, and we will be doing a 1-day sale on that launch date, where you'll be able to lock yourself into the Pro subscription at $10 a month, which we think is an absolute bargain, absolute steal. But we wanted to give early adopters, people who have been following us for a long time and supporting us for a long time, the opportunity to get in at a really good value. So that's why we're doing that 1-day sale. We'll soon be announcing that official date, and that will be the date of that sale to be able to lock in that $10 level. It will never be that cheap after that. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there. And make sure to go check out polaritydigital.io. It is free to access. Everything on there is free to access right now. And then we'll be transitioning into our the official launch of polaritydigital.io along with the pro subscription soon.